Saturday, May 10th, 2035. I hope you are having a wonderful weekend. As always, a free way you can support this channel. Hit the like button, subscribe to the channel, and leave a comment in the comment section, all for the algorithm. But otherwise, let's go ahead and dive on into this. And so, hey, how about an M2 money supply chart update? And I do want to emphasize, I am not a full believer in this, but I am. It can give me some level of hope, hope that if you watch my video yesterday, I'm targeting around $115,000 for Bitcoin short term. Well, this would have us go much higher than that. This would have us go up to around $185,000 in August. Please let this be right and let me be wrong. Let sell in May and go away be the worst thing that you could possibly do. And I don't know. So Decode, I love his stuff. Oh my goodness. I'm a big fan of the charts that he builds. He's doing a fantastic job. Now he does have this lined up with Elliott wave theory hypotheses that would put us at the peak of wave 5 at $240,000 or so by the end of the year. I, again, am not a believer in that. Hope I'm wrong. There are some things that are causing my thesis to weaken. I will admit that. But just wanted to add some more perspective to the M2 supply chart. If you have not watched any of my short form content on this, it's very important, because what happens is Bitcoin will tend to peak and then it will deviate from M2. I would love it if the deviation came later and not sooner, but I am mentally prepared for this idea that we will deviate sooner. And prepare for the worst, hope for the best. That's my mindset right now. As of this moment, I am a bull, and I will remain a bull until we see some kind of bearish market structure. And it does seem like we're still pretty early on in this uptrend. But moving on from Bitcoin Magazine Pro, the Bitcoin Everything Indicator, which takes into account all factors that influence the Bitcoin price action, is now trending strongly to the upside. When everything is pointing in one direction, don't fight the trend. I do agree with that. What other metrics are you watching? Let me know. So this is based off of fundamental analysis on macro analysis. Very important things here. Minor analysis. I shared a chart a few weeks ago indicating that the average cost of mining a Bitcoin is $90,000. And when we go down to the level that Bitcoin's average cost is at, that is a time to buy. That marks a bottom. And if you're wondering, well, what about when Bitcoin was at $74,000? Believe it or not, when Bitcoin was $74,000, the average cost to mine a Bitcoin was lower. So that's how much it's risen in the last few weeks, is now it's above $90,000. So minor factors for sure are in there. On-chain analytics, we're going to look at some posts from Glassnode.com here. On-chain is looking bullish. Technical, like I said, structurally, we are in an uptrend. Things are looking bullish for the time being. You could focus on M2, which is accounted for in the macro section of this and all of that. For the time being, let's all unite. And there are accounts that I follow that are very bearish for another time, for later on. Very, very bearish. And right now, short term, they are bulls. So it makes sense to be bullish right now based off of everything that we can see. Moving on here, some other reasons to be bullish in Bitcoin, at least, is lots of charts from Glassnode. So we see momentum increases for Bitcoin with its price climbing to a high of 97.9K. This was a couple days ago. Obviously, its highest in over 2 months. The rebound in price has provided significant financial relief to market participants, with over 3 million Bitcoin returning to a state of profit. So there's 4 charts that we're going to look at here. So chart number 1, a massive reduction in short-term holder unrealized losses. I mean, look at when we were at 74K, the short-term holders capitulated. And then when was the last time? August 5th of 2024, short-term holders capitulated. They sold the bottom. They like to sell bottoms. I mean, look at this. My goodness, July of 2024. I wouldn't be surprised if that was that day that Germany sold a lot of their Bitcoin that they were holding. And then September of 2024, another bottom. Bitcoin went to $52,000. Short-term holders, they sell bottoms. And then we see a significant spike in short-term holder unrealized losses. And then look at where they are right now. There's very little short-term holders selling at a loss. I mean, it would make sense since Bitcoin's up so much. Next, Bitcoin options implied volatility term structure. I'll be honest with you. I need to move on from this. I need to do more research on this particular chart. I did not see this. Bitcoin realized supply density volatility gauge. And what's it showing us here? What's it showing here? So green, dense cluster of coins around spot price, and pink, large light cluster of coins around spot price. So when there is a dense cluster of coins around the spot price, that tends to mark what? A local top, a topping pattern. We tend to go lower a little bit after, except for this one time here. And then pink, I think it's actually the other way around. So let's move on. We have Bitcoin spot ETF flows, and I've talked about this a ton. We could pull up the website that I normally go to. We have seen a good spike in Bitcoin spot ETF flows, and hopefully that will continue. I wouldn't be surprised if the numbers for the end of the week showed significant increases in spot Bitcoin ETF flows. This week there were a couple of red days, there were a couple of outflow days, but it's still significantly higher, especially than it was earlier in this year. Net outflow regime. I mean, earlier this year there were significant days of outflows until it got kind of flat, and now we're seeing significant days of inflows. So hey, let's see more significant days of inflows, please. Moving on to the stock market, a reason for pause, not to say it's over, not to say that Bitcoin's peaked, a reason for pause, that's all. The rally in U.S. stocks from Peter Brandt appear to be wedging. This wedge seems incomplete to me and will likely morph, so not a trade for me yet. I did trade the decline into early April low with a short position, never big enough when right, always too large when wrong. My bias is to go short again. So the bias is to go short, that we would see a break to the downside of this ascending wedge. Ascending wedges break to the downside 68% of the time. And so will that be what happens in the stock market? As of right now, my bias is yes. Would be fantastic if we did see a V-shaped recovery here and went higher. And I am going to show with you some information in the next couple of posts here that would indicate, maybe we are in a position where we would see a V-shaped recovery. But this is not a time, in my opinion, to openly declare that the bull run is back on, that the stock market is going to rally to new all-time highs. This is a time to be cautious. Could it happen? Absolutely. Could it be that we're reaching a lower high and we're going to dump for the rest of the year? Yes, it certainly could. This is one of those times. I know I'm going to get a troll comment about this. It could go up or it could go down. Yes, it could go up or it could go down. Really, this time, the stock market could go up or could go down. There's still some opportunity for bullishness short term, but give it another few weeks here. That's the response. It could go up or it could go down. I did mean to share this. No, I didn't. Never mind. The Bitcoin Prairie, very, very bullish, undeniably bullish, unhesitatingly bullish. I follow him. I love his stuff. Really big in gold and in Bitcoin. His username used to be the Gold Prairie. So you want to know how bullish he is? He's projecting Bitcoin to hit $600,000 by November of 2025. That's how bullish he is. Now, forgetting that, because I think that's a little wild. He does post some really fascinating stuff, and I've showed charts like this that really, this is a M2 money supply chart. This is when you price things in M2 money supply. Where was the peak? Well, the peak was during the dot-com boom. The roaring 90s were a speculative peak that we may not see again in our lifetimes. In the stock market, at least, we've certainly seen that level of insanity in crypto. And then 2008, the housing boom and bust, that was another lower high. But ever since then, when you factor in M2 money supply expansion, we really haven't gone all that much higher. I mean, the idea that we would get up to these levels from the roaring 90s and from the aughts, given how much money printing there's been, we have a long way to go. Now, that doesn't mean that that we're to be raging bulls in everything at specific times, but that means that, you know, people calling for a 1929 type crash, you know, if you want to price that in gold, sure. If you want to price that in dollars, I have a really hard time believing that we're going to hit something similar to the Great Depression priced in dollars. Now, we could feel a lot of pain when you go to the gas station in the United States, at least, and see $10 an ounce gasoline, but not in dollars. Now, here's something that is this bullish, you know? I mean, the SIBO Volatility Index, the VIX, since April 7th, based on VIX data going back to 1990, there is a 94% chance that the bottom is in for equity markets. And so what does that mean? That means when you see a big spike up in the VIX, and then you see a cooling off, it's just going to continue to go down and down and down with a little bit of fluctuation. And now the VIX is under 25. Generally, when you see this, 94% of the time, when you see this, the worst is behind us and not ahead of us. Now, is this time different, or is this one of the 6%? That's something that we need to keep in mind. We still are, like I said, up against some major resistance. And so if the ascending wedge is going to break down like it does 68% of the time, then what do we say? Is it a 68% chance that the bottom is not in, or a 6% chance that the bottom is not in? There's compelling arguments to be made either way. We need to navigate our way through this. Now, last, a little bit of levity, but also kind of something that I don't entirely. This might not be a bad idea. So, all right, I don't swear on this channel. I try not to, but let me read this. Being bullish on fat Fs is the easiest play in the market. We are becoming more lazy by the day. We need automation to drive us, people to deliver food, others to transport us. We sit at home and game or watch TV shows. And then he has DoorDash, Uber, Netflix, Spot, and Tesla. I don't know what Spot is. I should look into that. And other similar names. And you know, another one that I would add to this is HIMS, HIMS, a disruptor, perhaps the Netflix of the healthcare industry. Maybe this is it. Maybe this should be your portfolio in the stock market, is things that lazy people will take advantage of and fat people will take advantage of. We're not getting any skinnier in the United States, I can tell you that. And my goodness, DoorDash does not make any sense to me. How lazy do you have to be to spend a premium on getting something delivered to your house? Unless, you know, you're hosting a party or something and you're making a large order. But I see that people do this for individual meals. That's retarded. I'm not on TikTok, so I won't get banned. That's retarded. But if I'm going to have an opportunity to make money off of that, yeah, that sounds good. That sounds good. That sounds really good. So something to keep on your radar. But anyway, that is all I have for today. I hope you have a wonderful weekend. I will most certainly be seeing you in another video. Peace.